morning, everybody. It's Susan Phelps.
And Judy Atari.
And we are your Berkshire Hathaway real estate information specialist. And today we're going to talk to you about flood insurance in Florida.
Ooh, there's a lot to it. Oh, by the way, we are not licensed insurance professionals, and we do recommend that you seek advice for your personal situation from a licensed insurance professional in the state of Florida. We're here for information to give you things to investigate further.
Okay, then. We'll be right back. Don't forget to subscribe and like and comment below. We'll be right back. Well, good morning, Judy. Have you had your coffee yet?
Plenty of tea. I'm ready to go.
Okay, then. Let's get started. We have some information that was given to us from a Zoom call that we watched this past week.
Yep. We want to thank Home Services Insurance, which is under our Berkshire Hathaway Home Services family,
right,
for providing some of these slides. And we've combined that with some other research and some classes we've taken to bring this video to you.
And we're staying as current as we can so we can share all of this information with you. So let's get right into it, Judy. Now, folks, I'm going to be sharing my screen, and this is not something that either of us have perfected yet, so bear with us. Here we go. So, Judy, let's get in it and talk about Flood 101, flood insurance basics. First of all, you have to understand that there's a difference between damage, water damage, and flood damage. Water damage is caused by something inside the home, like a broken pipe, a malfunctioning toilet, whereas the flood damage is caused by a natural disaster where 2 or more acres or properties are partially or completely submerged under surface water or mud flow. So keep that in mind while we talk about who needs flood insurance and why. Most people only purchase flood insurance if their lender requires it, but there's a lot of cash buyers in our market today. It's not included in a standard homeowner's insurance policy, and the maximum coverages are basically $250,000 for the building and $100,000 for the contents. And we'll talk more about that a little later. And we're also going to talk about the waiting period for flood insurance a little later. So, Judy, what about those floods in Fort Lauderdale?
That's a great example of why somebody who may not be in a high-risk zone may want to consider flood insurance. We're not here to encourage or discourage, but we want to talk about it. Generally, there's times where you'll be required to, but things happen. They had an incredible amount of rain. Some of it included different tides, things like that. But anyhow, a bunch of flooding happened that normally doesn't happen, something they've never seen. The airport flooded. And a lot of those people generally would not have had flood insurance. So, and it's not covered under a normal homeowner's policy.
Right.
So just one of those things. We just wanted to point out that there are times that if you're not coastal, you can be inland and in a high-risk flood zone, or you could be inland and in a low-risk flood zone. Your insurance for flood insurance premium would be lower. And we just wanted to point out that crazy things can happen and floods can occur anywhere.
Our climate is changing a little bit. We have some serious stuff going on with major hurricanes. So here we're trying to give you the information that you need to know. You can find out what your flood zone designation is. We want to give you some ideas about where to find that. You can find it on your the property appraiser site. Plug in your address. You can find it on the MLS sheet. That is a required field that needs to be filled out. And you can, ask the owner, but always verify. And hopefully,
right, that's what I was going to say. Yeah,
always verify. Yes,
yep,
and
things change. Your seller may, in very good faith, tell you you're in one flood zone, and it has changed. So
exactly.
always verify yourself.
Exactly. Low to moderate risk areas start with the letters B, C, or X. High risk areas start with the letter A, and the high risk coastal areas start with the letter V. And Judy,
Yeah, I was going to say V, a really easy way to remember the V is the velocity. So you've got both wave and wind velocity.
right.
And if you have a V or an A with a number after it, that is a number that designates how far elevated your first floor needs to be. And it's actually a little more than that number. So if you have like a V13 rating, your first floor probably has to be 15 feet off the ground. And the
Oh,
only thing that can be there is outdoor flooring, stairs, a pool, parking, and storage.
okay.
No electrical panels, no outdoor bathrooms unless it's just a shower that warms by the sun. But yeah, nothing really can be there on that initial level. So,
And then there's the D category, which is an undetermined risk area.
and I don't see that very often, but it's there.
No, I've never seen it. So,
Yeah.
how are flood zones determined? Primarily by the history of the flooding in the area. And you can see here again that anything that starts with the D, that's a possible flood risk, but most likely the X, C, and B flood zones are the ones that are low probabilities of flooding. The special flood
Right.
zones, A and V, have a 1% chance of an annual flood. So, how do we determine again the flood zone for a property? There is a website called mscfema.gov.portal home, and I'm going to share what I found when I plugged in my home address, Judy. You go to this website, you plug in your address, and voila, a map comes up that's going to spot your property. And here you can see that my property is indicated by this red flag here. And when you look further down to the key for this map, you'll see that if there's no screen, in other words, it's not blue, it's not orange, there's no screen, then that's an area of minimal flood zone. I'm going to change this here
Flood
to
risk.
the flood risk. And I'm going to change it here to show you that indeed, here you have the blue screen over high risk areas. You've got that kind of orangey screen, and then you have no screen, which is where my property sits. And it's very unusual, and this is only because our elevation is so high, as is the elevation for all of these properties that are on our little island. And indeed, it is a little island. You can see that the canal surrounds the island and connects to Philippi Creek. Now, my neighbors across the street, I'm going to flip it back to street view. My neighbors across the street here on America Drive, their properties are backing up to the creek. So part of their properties, land-wise, are in the flood zone, but not the homes. Homes here are in the flood zone. Homes here are in the flood zone. And there are ways to clarify that in case you have a property like this one that is partially in a flood zone. And like Judy, I think you mentioned that that's harder to get a variance for, but it is possible.
Right. Yep. So if any part of your property is the flood risk zone, you are considered high risk. You have to prove to the insurers that that is not like usable area of your property. Maybe it's down a ravine,
Okay.
that nothing's touching. But it's harder and harder to get the amended map. I think it's a letter of map amendment is what they call it.
Oh,
And
yeah.
that's where you show that that's so far from your property or your home is so elevated, it's not going to affect
Right.
it, things like that. So,
Okay.
yeah.
Okay, then we're going to move on to the next slide. And remember, here you have this website.
Yep.
And
Oh,
yeah.
I was going to say one thing that we find, since Susan and I do work so frequently with new home construction,
Oh,
you
right.
may go to this site and you might see where your new address is going to be is maybe had some old data, but it might be showing a high risk zone when the builder and developer have gone through great lengths to develop the property, change runoff, maybe even reroute some water things, which has been done historically. So you may find that what a sales advisor is telling you is now an X could be very well true. Again, it would just take an additional research, perhaps a third-party survey. But just to let you know that don't panic if you see a high-risk zone where someone's told you it's not. Just do more investigation.
Right. Okay, then we're going to look here and see how that flood premium that's applied to your home is determined. We used to use the legacy method up until October of 2021, and they used several sources of data, FEMA included, along with a rate map zone, the base flood elevation, the foundation type, whether it's slab or up on bricks or elevated, and the structural elevation, then other fees and surcharges. The new pricing methodology, which in my opinion and most people's opinion is a much fairer estimation, because we had low coastal properties that people that were not in coastal properties were sharing the burden of those coastal properties being insured. So again, we're using the FEMA source data, additional data sources that include the federal government's data source and commercially available third-party sources. They're
Like the
including, right, and they're including the cost to rebuild and other rating variables that include what we were using, but now the distance to flooding sources and the flood type, the building occupancy, whether it's a second home, a rental, the construction type
commercial.
that is, right, yeah, the construction type, whether it's masonry or wood, the foundation type again, the ground elevation, first floor height, the number of floors, and prior claims. And we'll talk about those prior claims a little later. So this new pricing methodology is called Risk Rating 2.0.
So, and I don't think their methodology changed from, I think it was like the late 60s, early 70s is when this flood insurance program was created. I think it hasn't been improved since then. So this is good.
Right. Okay.
So, elevation certificate. What are those? So they used to require an elevation certificate to determine your rating. So they're no longer using that to determine your flood risk. However, they are useful in other instances. So your municipality may require them. It may be determined, like if you're in that VE, just to verify that your home is properly elevated, that you're complying with your local floodplain management and things like that. So
Right.
Elevation certificates should be renewed, standards change. And I was just in a waterfront specialist class, and they suggested if it's been more than a year since that certificate was created, to have a fresh one done by a professional surveyor.
And it's useful if you're selling a property.
Definitely, definitely.
As well as inspections and so forth.
Yeah, yes.
So these rating variables are looked at a little bit closer. Judy, you were doing some research where what is included, but FEMA won't include prior claims history in the initial rate calculation with Rate
Right,
Risk
for this
2.0, right?
Yes, yes,
And
yes, currently, right.
are we all starting with a clean slate?
Everyone's got a clean slate in the new system. Prior claims will be applied at renewal of the policy after a first loss, first claim.
Okay.
And that goes on a 20-year rolling period. So if you happen to have one, like the Fort Lauderdale thing, one instance and it doesn't continue, and after that 20 year that's off the record, you're fine. If you have severe repetitive loss, then a surcharge will be included in your premium. So
Okay.
until first loss. That's about as vague and clear as mud, but yes.
Yeah. Okay, so we have some excluded losses. Oops.
Yep, oh, gotta go down one. Okay. So increased costs of compliance claim payments and increased cost of compliance coverage is a resource for flood insurance policyholders who need additional help rebuilding after a flood. It provides up to $30,000 to help cover the cost of mitigation measures that will reduce flood risk. And this is the source of this information is FEMA. ICC coverage, it's part of most standard flood insurance policies available under FEMA's National Flood Insurance Program, which is what we've been talking about.
Right.
So, and then also excluded losses. There are things that aren't covered also in flood insurance. So docks, seawalls, which can be incredibly expensive, valuables in the home, heirloom items, cash, things like that are also not covered losses in your home.
Okay.
So there's a lot to it. Yeah.
So you may make a claim for those, and then those claims are closed without payment.
Right, and those are the things that wouldn't be covered. Exactly.
Right. Okay.
And in some places you might have a dock now, and if your dock is wiped out, their rules have changed in some areas in Sarasota County, and you may not be able to rebuild that dock. So there's a lot more and more information. So just go into it with your eyes open on what's going on.
Right.
Okay.
Well, we have caps.
We have caps. So there have been a lot of policies that have been subsidized or assisted by the federal government. They are pulling back those subsidies and that helpful money. So people should expect some increases in the flood insurance portion, but they can only go up 18% for your residential, your home.
Annually.
If it's annually, correct. Thank you. If it's a rental property, a commercial building, your increases can be higher. But a really good thing is if you buy a home in a high risk area, we'll say a coastal property, the previous homeowner can pass that policy on to you, and that will help limit the cost.
And my question to you, Judy, is does that seller get a prorated amount returned to them on the settlement statement?
From what I understand, yes, or that can be negotiated. A selling tool, a seller might say, we will assign our policy and just give you what we've already covered for the remainder of that policy this year.
Right.
So that can be negotiated, but generally it's prorated just like property taxes would be.
And the sale of a property will result in a refund to the seller unless they assign it, correct?
Correct. And that would be at closing. So the insurance company is not really going to give that refund, but it's going to be in the property transaction from what I understand.
All right.
And we've talked a lot about like required insurance. Many lenders, including Citizens, which we've talked about as have we talked about this yet? The lender of last resort in Florida. So many Citizens policies in zone A and B and by other lenders require flood insurance through the National Flood Insurance Program and or a private insurer. Citizens will be requiring it for even people in lower risk zones throughout the next few years. Oh, here we go. Throughout the next few years. So properties that are currently valued at $600,000 or more will be required to have flood insurance. as of January 2024. And then it goes from there. So by January 2027, all properties, regardless of value, even if they're outside of flood zone, will require flood insurance.
Now, that's just if it's on a citizen's policy.
Citizens, right. Many
Okay.
lenders will also require it. So depending on who has your loan, they generally just require it in high-risk zones. So those are just things to investigate with your lenders. Citizens, even if it's a cash deal, citizens and some insurers may require flood insurance. People who own their homes outright that don't have any property insurance don't have to have it, obviously.
Right.
So they're like self-insuring.
Citizens took over a lot of policies. They took over
correct
lots of policies. And because you have insurance with Citizens, you have to have flood insurance. Is that what you're saying, Judy?
Yes.
Okay.
You have to have flood insurance. And there are, and I'm not sure if we've covered this, but Citizens is the insurer of last resort by the state of Florida. They don't want to be in the insurance business, so they are trying to sell off or transfer a lot of those policies to companies, Slide Insurance, and here's the good one, Loggerhead Reciprocal Insurance Exchange. We got that right. We're going to take over, I think you said 26,000 policies.
Well, yeah, to start with. And
they're encouraging other people to come in and take some of those flood policies or the property insurance policies over.
Well, now you must transfer
you must transfer, right?
If it's within 20% of what Citizens was charging you.
So I think 25% of the current premium. So if you're at Citizens and there's an option for you, and that requirement exists now. If there's a possible alternative that's within a reasonable 25% of your current thing, you have to go. I
believe what I'm seeing in the paper, and this was just announced yesterday.
So these new guys,
because this law was passed in December, I'm seeing that if the offers are within 20% of the cost, you must take it. You must take it.
Oh, there you go. Yep.
Okay.
So because they don't want to be in the insurance business, but they were doing it to cover the citizens.
Right.
And did we talk about the values yet? What's insured? So up to $250,000 for rebuilding and $100,000 for contents, that is insured.
Okay.
It's right there down below. Right. There are private insurers. So when I was doing my research, I found like on Progressive's website, they have some policies that will provide up to $500,000 for rebuilding and up to $250,000 for contents.
Okay.
Again, that depends on the cost of the policy, the deductibles, all the other good stuff. So.
Okay. So that's what we know, folks.
There you go. Oh, that final slide we have with the when is flood insurance effective?
Oh, sorry, Judy. Let's go back there.
Oh, this is an important one.
I thought we were done.
Yep, where's our slide?
Oh, your slide. Here we go.
There we go. There you go. So this is from FEMA and the National Flood Insurance Program. And they want to make sure that people understand when you get a flood insurance policy, it is generally effective 30 days after. There's a 30-day waiting period, and then it's in effect. Not to be too boring here, but if you're in that waiting period and the flood starts and your policy takes effect and then you have damage, it's covered. If the flood starts and then you buy insurance, generally it's not covered. So you can't do it afterward knowing that you've had damage. If there's a change to an existing policy and the damage occurs, you're still covered, but it may be at a lesser amount depending on what that change was. So there's a lot of scenarios. We'll attach this below. One note that they did have on here, though, at the bottom is lender required flood insurance purchased as a loan requirement goes into effect immediately. So if you buy this and no flood has happened and your damage occurs during that initial period, you're covered. If the flood starts and then you get it as part of your loan, damage is not covered. So, and this is why the insurance companies a lot of times will stop writing new policies when threat of a hurricane.
Oh, yeah.
When we tell our customers, hey, if you've got a new house, get your insurance in place, even though you're closing in 20 days, get that going.
Right.
So that that's in place before they put that freeze on it, because then you won't be able to close on your house.
And it's very, I think it makes sense that you tell your customer that you're in the box. The closer that
Yes.
storm comes to wherever your property is, if you're in the box, that's the cutoff.
So again, our biggest note is here's trying to clear up some of the changes and talk with your licensed professional, get the proper survey if you feel you need that. If your realtor suggests you get certain surveys or inspections, generally they're a good idea to do.
Right, right.
So,
Okay, good.
but ever changing, policies are ever changing. Inspections and condo laws, we'll go into that in a different thing. And hurricanes, we're going to talk about how to prepare yourself and your home for hurricanes.
That's our next video.
In another video, yeah.
Okay, good wrap up, Judy. Folks, if you have any questions, give us a call. Here's our phone number. Give us an email, comment below. We will get right back to you.
Oh, and if you need an insurance professional contact, we know a few that we can provide.
Right. We have our list of references that we trust, and we do want you to consider those because we work with them.
Yeah.
So,
yeah. And we have no financial gain from that.
No.
Nope. I think we're good. I think we've had all this excitement for one day is enough.
Yeah, I think so too.
Insurance.
All right, folks. Boring topic, but a very vital topic for you if you're a homeowner or you're getting ready to buy a home. And if you're looking for a home, give us a call. We're here for you. We are your real estate information specialists. So until the next time, bye-bye.